Most people will think meme coin trading is impossible. You think it's gambling, you think it's luck, and you think that only whales can win in this game. But nah, here's the truth. If you got the right system, the right setup, and the right mindset, then making thousands of dollars a day trading meme coins is not only possible, but it's also repeatable. I know because I've done it. In the past month, I've pulled in over $1.3 million trading meme coins with the same exact approach, and if you don't believe me, here's a screenshot to prove everything. Over the past 2 years, I've taken scraps and turned them into over 8 figures. All from trading, but the most important part is I didn't do it from YOLOing pumps. I built the most aggressive on-chain system that has been proven to generate multiple millions of dollars in profit. It came from years of trial and error, and that all led me to one simple strategy that helped me go from a lost beginner to hitting trades like this last month with a $1.1 million in profit. And in this video, I'm going to be breaking down the exact framework of this strategy and how you can use it to hit the same trades I do.
And guys, this strategy is called the alpha filter. This is the 3-part system that filters out 99% of the noise and actually locks in on 1% of coins that are actually worth touching. You see, the problem I was having was I was getting overwhelmed by market volume and noise. I was bringing up impulsive trades, like for example, I bid a Trump dog coin on a Telegram channel I was in without even knowing an actual real idea whether or not it was a good investment on my part. And at that time, I was absolutely clueless, and I had to watch my portfolio number on my wallet just fly straight to 0. And so I had an epiphany. I realized if I didn't develop a real system to separate signal from noise, I'd be stuck in the same exact desperate cycle. So in today's video, we're going to be breaking down the complete framework that has made me over $1.3 million trading meme coins in the last 30 days. I'm going to explain the edge and why meme coins are the only market where the underdog has an edge. I'm going to be breaking down my setup, so my full trading terminal, my axiom pulse filters, and my sniper presets, and obviously the alpha filter. This is the core strategy that I've been using for the past few years to find the winning coins, the rules, risk management, to prevent you guys from blowing up all your accounts, and also the mindset. So some psychology hacks for consistent daily profit. This isn't hype, guys. This isn't luck. Meme coin trading is just like trading in any other market. It is a system. Look, guys, if you're still here asking why meme coins in the first place, I'm gonna explain why not stocks, Bitcoin, or other safe assets, because no other market in the world gives you asymmetric shots on the daily like meme coins do. Meme coins, it is driven by attention, narrative, and culture. It's not by fundamentals or cash flows or anything like that. I don't know how many times I have to say this, but meme coins are not just coins. They are belief systems with just liquidity attached. I want you guys to take Trump coin, for example, a coin that all of you guys have heard of or know. It is a coin that ran to $75 billion in market cap just because of politics, and politics is attention, and that also generated liquidity. Or if you guys want to make an example of Whiff, which is just a simple meme, it is a dog with a hat, but it went viral, creating a multi-billion-dollar cultural asset. This coin went to billions of market cap. It is just a dog with a hat right here. But it is proof that in this market, culture, narrative, and attention is where the value is at. And throughout this video, I want to ingrain this in your head multiple times, because these are the 3 pillars of asymmetric opportunity. 1, you have narrative liquidity. Get the story early. Capital always follow belief. Community scale, a Telegram thread, a tweet can move more money in 10 minutes than a startup seed round in 10 months. And I've seen it in real time. Execution velocity. Seconds matter in meme coins. The right tools allow a small player to outmaneuver whales. You are essentially always taking advantage of the volatility. If you guys don't like any volatility, then I'm sorry, meme coins are simply just not the market for you. Ladies and gentlemen, I'm sure you have a setup already, but if you don't, I'm going to quickly brief over this. You wouldn't enter a boxing ring with one eye closed. Same as that goes, don't trade with a slow, inefficient setup. In memes, milliseconds are simply leverage. I don't want you guys to be all tabbing around your laptop. I don't want you to be scrolling all these tabs on your phone. I want you to have a multi-monitor setup. I want you to have Twitter, Axiom, Telegram, Discord, new pair trackers all simultaneously open at once. Because if you don't, you're going to be delayed, you're going to miss out on news, and you are fighting in a player versus player market, and you're simply just going to get wiped out. So you might ask, how do I set up my Twitter? How do I set up my Discord? How do I set up my Telegram? But in Twitter specifically, there is something called crypto Twitter, and that's where most of the alpha, news, and everything that is important to trading meme coins is spread and moving. I recommend you guys to curate your Twitter/X page ruthlessly. If your For You page isn't pure crypto, you're losing money. So I recommend you guys to follow some top traders, narrative snipers, meme accounts who follow and move culture, and KOLs who spot attention flows early. And over time, your crypto for you page is just going to be extremely curated for trading meme coins. If you want to make it easier for you guys, you can go to my Twitter profile and see who I follow and build your own curated feed from there. So obviously start following Twitter accounts that seem crypto native to you. As you're scrolling down, you're going to see crypto native accounts. Obviously there's a lot of KOLs, which are key opinion leaders that are tweeting about crypto constantly, and over time your feed should just be entirely crypto. As you can see, my crypto Twitter feed is pretty much just all crypto information. You go to these profiles, they're all tweeting about meme coins, crypto, stable coins, and if you go to any of these pages, they're likely just tweeting about crypto. A lot of them give some good advice, some of them tell their own stories, but nonetheless, you're going to get a lot of crypto information. Number one thing to stay away from is what I'm about to show you right now. Like, this is the number one beginner trap that I see a lot of people falling into. It's these fake Twitter KOL pages that are faceless, spamming these giveaways or whatever they're doing. They're not up to any good. The reason why is whatever they're posting, it's meant to just make you consume, lose money, dump your money into whatever they're promoting, and they are profiting off of you without actually giving any value to you. If you see these guys promoting a coin, just know that they were likely paid to shill it. Telegram and Discord are going to be your war rooms. I mean, I use Discord 24/7 whenever I'm on trading because I know that this is my direct access to any new information, any new scans, and the more eyes that people are trading, the more people that are trading with me, the more helpful I'm getting. Alone, you'll find some plays, but together, you're going to front run entire metas. And I just want to say a lot of you guys are, again, falling into a lot of traps. A lot of free groups are all traps. These people in the Telegram groups, they're going to shill their coins and dump on you, and you're pretty much their exit liquidity. You're donating money to them. And lastly, you want some crypto, so get a Phantom wallet, install Phantom wallet, purchase some SOL on a new exchange, Coinbase, Binance, Kraken, and send that SOL to your new Phantom wallet address. Anyways, now that we got that over with, I'm going to be breaking down my exact trading setup, and that's through Axiom. So, if you don't know already, Axiom is a all-in-one trading platform built specifically for Solana trading, and trading without it is like flying blind. It has a real-time tracker for every single coin and volume surge. It has a built-in Twitter feed, so if you don't have multiple monitors, I guess you can do this, and I do recommend actually using the Twitter tracker. And it also has built-in live wallet trackers. It has an integrated bundle jacker, which I will go into in a second. It has on-chain perps and a fee rebate system. Now, this is what Axiom Pulse would look like, and this is where you would be looking for new pairs to buy. And to set up Axiom is extremely easy. All you need to do is click the Axiom link linked in my description, and that actually gives you 20% off fees, which is the lowest compared to what all Axiom users are getting. Once you get there, you can sign up using your email, Google, or just simply connecting your Phantom wallet. I do want to know, guys, when they give you that recovery phrase when you sign up, please write it down safe somewhere offline, and that is your only way to recover your Axiom wallet. Once you sign in, you're pretty much good to go. Let's talk about the actual platform itself, because it's pretty easy to get overwhelmed with all these features that we have over here. So let's just start off with the Pulse tab, and that is the heart of Axiom right here. The left column will show you new pairs, which is every single fresh token in real time. The middle column will show you near migration, which is approaching the market cap threshold. And the right column is called migrated, which is newly migrated pairs in the larger liquidity pool. But the reality check is 95% to 99% of what appears on Pulse is just garbage. And if you chase volume blindly, you're going to lose. And the first skill is learning not to buy everything. I know you guys have FOMO and sometimes you just want to buy something, but trust me, sometimes no trade is the best trade. So this is the Pulse tab strategy. It's going to comprise of 2 core setups, and the market tells you where to hunt. Your job is to listen and adapt, and that is actually how you separate signal from noise. Scenario 1 is if it's a hot market. If you see many coins successfully moving into the migrated column, then your action is to hunt in new pairs. Your filters should be 11K to filter dead coins, and also select a specific protocol. So right here, we're in Pulse. I'm gonna select filters, press the dollar metrics button, and scroll down to market cap. I really recommend you guys to put in $11,000 market cap or higher because you're going to filter out a lot of the trash that is being deployed. If it's a normal or slow market, if the volume is low and few coins are migrating, then restrict yourself to migrated only. I want you guys to play it safe out there. Don't have any filters, just study the coins that have already proven themselves. You might ask why this approach even works. It's because we are going for quality. Migrated coins have already proven buyer demand and narrative strength, so it's a smaller, high-quality pool to learn from. And also discipline. Beginners get wrecked trying to scalp every single fresh pair for tiny percentages, and one rug erases a week of small wins, and I really recommend you guys to stick to quality. Me personally, I watch all 3 columns and instantly can tell what has potential, and that's just experience. And until you're there, stick to migrated and train analysis on fewer high quality plays if the market is on a medium to low volume scale. And I know a lot of you guys might have seen a lot of traders like Cupsy scalp 50 fresh pairs and make a lot of money, but that is just a trap. Those plays use followers as exit liquidity. The only reason why Cupsy is able to make so much money off of his specific strategy is because he has a lot of people feeding them or years of honed systems. You're not here for $100 scalps. You're here for literal asymmetric trades, narrative-driven runners, and that is usually found in migrated. And you might notice in Axiom, there are pulse icons and a Twitter tracker and wallet tracker section. So number 1 is the developer wallets. Check the deployer, check their history. Do they recycle? Do they re-rug? I'm going to show you an example in live time right now. So if I go over to Freaky Naughty Live, you can go to dev tokens, and it looks like this dev is fresh. I go down to Walt. This guy has deployed 3,665 tokens. And this is definitely a token that I would stay away from, guys. Number 2, bundle wallets. Funds dispersed in multiple addresses, and that could be stealth insider loading. If you hover over this icon right here, it shows bundle holding. And bundle holding is not necessarily a bad thing, guys. Sometimes it's okay to have a low bundle count. Obviously, that's going to happen if it is a very hot coin that a lot of people are buying. But it is something to watch out for sure, because it could be the dev holding a lot of supply to dump on your heads. But let's say if a bundle count is 72%, that is definitely something that I would be aware of and cautious of. Insider holders, that is tokens airdropped or transferred without payment. That sometimes is a huge red flag. It could also be part of the bundle. I mean, going to this coin right here, this is entirely insider holding. He spent $0 on all these tokens right now, and they are up hundreds of dollars. That is all tokens that were dispersed and sent to different addresses. Snipers. Snipers are just first block transactions, and the Twitter logo, you can hover over the previous Twitter handles, link to the contract, and if it's had multiple, that's probably deception, honestly. So if you hover over here, we got either Twitter communities, Twitter accounts, and you can simply just press this and see what their community is like. You can do more due diligence on the coin, learn more about whatever coin it is, and actually see whether or not you want to buy it. But you need to apply the alpha filter strategy that I'm going to break down later in the video. And sometimes if the Twitter account has had multiple, that's probably a huge red flag. They're probably rebranding to make new coins. Execution, news flow, settings, and signals. If you're tweaking settings during the launch or a very hot time during the market, you have already lost. Speed and preparation are your edge. All you need to do, guys, is set these presets once. Slippage, 30%. Meme coins are extremely volatile, so that gives you a lot of transaction room to execute without failing. What slippage pretty much is, for example, if a coin is 100k market cap and you're pressing buy, if your slippage is 30%, you can get in at 130k market cap. Vice versa, if it's 100k and it goes 30% down, you can get in at 70k market cap. That gives you room to execute the trade without failing. Priority fee, I recommend 0.03 for sniping and 0.01 for normal trades. That just ensures that your transaction is processed quickly and not slowly by the network. For bribe, I would recommend the same thing. It's an extra incentive for buying these coins and including your transaction blocks. And I would always recommend MEV protection to be on. That actually protects you from sandwich attacks where bots front run and back run your trade, costing you a lot of money that could be yours. So again, putting these presets in, all you need to do is press your preset button over here and buy and sell settings. So these are my personal ones, but If you guys are working on a lower portfolio, or if you're not sniping new pairs, I have different settings for that. So now I'm going to show you my personal presets when it comes to trenching or sniping and playing these new pairs. So obviously you want to go into your presets, press preset 1. My buy settings, it's 60% slippage because these new pairs can go up and down so tremendously fast. Priority fee, bribe fee, 0.05, 0.05. And merit protection, I would recommend secure. Sell settings, 40% slippage, 0.25 bribery, and 0.25 priority, and mev mode reduced. For migrated, I do have different settings. You can set it in a different preset slot. I have 20% slippage, and I have these presets throughout all my columns, new pairs, final stretch, and migrated. For wallet tracking and Twitter tracking, I'm going to be leaving a link in the description of some of the wallets and Twitters that I do personally watch. So when you go to the link in the description, I do have tracked Twitter accounts and tracked wallet addresses. You can simply just copy and paste these, go, import, and they'll all be there when you're trading. And then when you're on Pulse, you can have your Twitter tracker open. And every single time someone on your Twitter tracker tweets, you'll be instantly notified in real time. Anyways, do not blindly copy trade. Your entry will be worse. You're always going to be buying later than them, buying at a higher price. You're going to be borrowing conviction. You don't actually know what they bought. You don't have any conviction that you don't even know what it is. And so you don't know when to sell. And you become their exit. When these sell, you'll be left holding the bag because you actually don't know what you're buying in the first place. So what I would recommend when you're wallet tracking is to just simply gather intel, use the tracker to see where smart money and attention is moving. Apply your filter. Does the coin actually fit your narrative thesis? Does it align with your strategy? And then make your decision. I just use it for conviction purposes. I don't actually use it to copy trade others. But the exception is if you truly discover anonymous wallets who have consistent, proven results. Copying, I guess, can work, but only if you understand the narrative and you actually understand the coin and you know the why that you are in the trade. In Axiom, you can create unlimited wallets and a single buy order can be split across multiple wallets. And this is a massively underused feature used by only top traders. So, for example, one large wallet holding 3 to 4% of supply on a coin usually seems extremely scary and paints a target on your back. So what I would really recommend is actually splitting the same amount, the 3 to 4%, throughout 3 wallets. 1% each, it looks benign and keeps your activity private. The second benefit is actually for trenching. You can use it for tiny entries to test coins and liquidity. It's spare liquidity, and it's also for profit tracking. So when you put into practice, this is what I personally do. I trench with 100 SOL, and I trade with only that capital. I use it for small size plays. And so when you put into practice, I usually trench with around 100 SOL. You can start with a fixed amount. In your trenching wallet, you can use this capital for only active small-scale plays, and every single time you push the balance over 100 SOL, or when you profit a lot on a day, you can sweep the excess into your profits wallet. Remember guys, what I preach is your profits made during crypto is not true profit until it is stabilized into real US dollars. And finally, I don't know if I need to mention this, but the final edge is the fact that Axiom has a fee rebate system. So that is the undeniable truth that Axiom is the #1 trading tool. Whenever you make a trade, a small rebate is generated and it's automatically credited back into your account. With that being said, let's move on to the alpha filter, which is my exact framework for filtering 99% of the junk and surfacing 1% of coins worth your attention. Let's now break it down. Also, let me just keep it real with you. If you're trying to figure out this game solo, you're just going to set yourself up to lose. You're going to miss plays, you're going to fall for scams, and you're going to burn out faster than you think. So I really do encourage you guys to find an edge in being in communities. Memecoin trading is a social psychology and narrative surfing game. You can't really see the whole picture alone, and every single 7-figure trader I know credits their network. You have a person watching wallets, another person watching new launches, and another person scanning Twitter. And by being in a community, you're going to surround yourself with killers, hold each other accountable, and ultimately go exponential. Even though trading meme coins is a player versus player game, trading with groups actually helps you exponentially level up and grow together. And that's why I built the Fortune Inner Circle. We trade together, we study wallet flows and narratives in real time, we call coins together, and we hold each other accountable. And even just now, I caught a 72k play that was called in my Inner Circle for a 4x. Bowen just made 3 SOL, and the list goes on, guys. So if you're interested in actually surrounding yourself with absolute killers, you can apply to join Fortune. The link is in the description. So the alpha filter is comprised of research and narratives, but the core mindset is always about trading attention. Here's the part that 99% of traders never understand. You're never trading charts, you are trading attention. And the 99% of people are glued to boomer stock indicators and they see it as financial assets. Whereas, me, I'm glued to mindshare. I see belief systems with liquidity attached. Therefore, the only questions that matter are who's paying attention and why are they paying attention? And how long will they keep paying attention? What is a narrative? A narrative is just a story with market power. It doesn't have to be true, it can be fake, but it just has to be believable enough for attention to spread. Examples of narrative power: a dog with a hat, a simple viral meme that became a multi-billion-dollar asset. Trump coin, a story of a political figure that created enough attention to fill tens of billions of market cap. And AI tokens, global hype around ChatGPT that created a powerful story that made an entire crypto sector pump. Get in early and you're front-running psychology itself. At the moment you've all been waiting for, the alpha filter. This is my 3-step system and the framework that has made me over 8 figures trading memes. It's how you separate signal from noise. Step 1 is always the market condition check. Before you do anything, before touching a coin, I always check the environment. How much volume is actually flowing on chain right now? Are there new launches that are actually getting buys? And is there a dominant narrative meta forming? Whether it's AI, politics, CCM, live streaming, whatever it might be. Is there a dominant meta forming? If no, sit tight and only take A+ conviction plays. Is the environment green? If it's yes, then go aggressive. Step 2 is narrative valuation. I asked, does this coin story deserve attention? Will people see the story? How will they react when they do? And what is the ceiling for attention? And how long can this story even last? You need to set mental price targets. If the answers aren't strong, I skip, no hesitation. As I said, no trade is sometimes the best trade. Step 3 is the inefficiency check. This is the real edge. I check, is there a mispriced window? Has crypto Twitter caught on yet, or am I early? Is this lagging similar coins that is already pumped? Are insiders or respected wallets loading in? If it's yes, then this is how you actually catch these 10x's, 50x's, and 100x's that you see. I cannot stress this enough, guys, but most people will lose because they force trades every day. We win because we only trade when it's time. I see this time and time and time again. We don't predict, we filter. Now, in simple terms, I'm going to be applying the alpha filter to the trade that made me a $1.1 million last month, which was Memecoin. Step number 1 is a market condition check. On-chain volume was high, peak Solana cycle with constant liquidity and multiple active metas. There were new launches getting buys, and there was kind of an appetite for cultural and celebrity coins. The narrative was hot because celebrity politics meta was already a proven narrative. Trump coin, Elon coin. So when Kanye's name entered the space, it wasn't like one of those farm scam rapper coins. Kanye is one of the biggest names in the entire space and has multiple crazy affiliations to both music, celebrities, and politics. Now, I was ready for Kanye coin to launch. I found the contract address before it deployed because I was looking. I was doing deep on-chain analysis and I found and heard rumors of Kanye launching and I was on the lookout. As long as I could get a good entry, the money and opportunity was there. Step 2 is narrative valuation. What is the visibility of this? It's guaranteed. It's Kanye West. He's a global cultural icon. And the reaction, it would be viral. The story would be shocking and meme-worthy. Attention ceiling. It was insane. It had the potential to become the #1 celebrity meme coin, other than Trump coin, I guess. Now, guys, the proof was all in the pudding. If you look here, I was tracking all of these wallets. All of these huge wallets, all of these huge traders were insider buying Memecoin right before the launch. I knew that something fishy was going on and that a potential Memecoin might launch. I was on the lookout for new deploys, new scans, new deploys constantly, every single hour of the day, every single minute actually, just constantly watching. And you know what? Shams and I, we literally sent the contract address right before even launch. Keep an eye out on this. I mean, as soon as I saw it, I pretty much shared it inside of my group Fortune, and we were just watching for the coin to deploy. We bought it, we scanned it at 800 milli market cap, and the market conditions were screaming risk on. However, guys, I always set mental targets for each trade I make because I compare it to similar coins. In this case, it would be Mothercoin. It was a coin dropped by Iggy Azalea, and it went to 250 million market cap. But that was back when celebrity coins were actually seen as extremely bullish, and it was pretty much new and celebrity meta. Now that the sentiment was lower for celebrity coins, we would expect somewhere around Mother all-time high since Kanye was way bigger. Step 3, apply the inefficiency check. Has CT caught on yet, or wasn't I early? I was early. I found the contract address before the public launch through on-chain analysis. Confirmation. I saw insiders and other respected traders buying heavily right after the initial tweet. And I also saw insiders buying random Kanye launches and trying to get in before everyone else did. Catalyst analysis. The final catalyst was the face endorsement tweet. As soon as I saw Kanye do this and show his face on the Yeezy coin, I knew that that was the peak signal. So that was my exit strategy. The moment Kanye's face endorsement tweet went live, I pretty much knew that it was pretty much topped by around plus or minus 30%. And I began selling heavily, knowing that the primary narrative fuel was just spent. This caught the top within 20 to 30%. And then within a matter of minutes, I said selling at around 3 billion around, and I needed to take initials. And for those of you who don't know, Kanye coin was 10% circulating, so only 10% of the current FDV was the market cap. And then I said, selling here, be careful, it flipped Iggy's all-time high. I'm moonbagging some, and I was up $1.2 million. I had that price target in mind. The result, guys, was a perfectly mispriced entry, a clear exit plan, and $1.1 million in profit. That is the alpha filter in action. In case study 2, let me show you how this works in real time. A while back, I stumbled on a coin called Video, and at a first glance, it was just another tech coin, but this tech coin made me over $500,000 in a day. Step 1, market condition check. The environment was a perfect storm. The AI meta was ripping because of the GOAT run. There's a coin called Goatius Maximus that ran to billions of market cap because of the AI meta craze. The volume was high and new launches were printing every few hours, and there was AI coins running to hundreds of millions of market cap. Zerebro even ran to 786 mil. GOAT ran to billions of market cap. GOAT ran to 1.3 billion market cap. There was other AI coins called Zerebro that ran to 800 million market cap. And there was also Fartcoin that ran to billions. So it was obvious that the AI meta was going crazy. Step 2, narrative valuation. The backing was insane. Trusting neutrals were following, adding strong social proof. I even made a whole entire Twitter thread on this, and that's why you guys need to follow up on Twitter. But look, Dracula was followed by Paradigm, one of the biggest crypto VCs. And the devs were building an app. Everyone had eyes on AI, and the coin wasn't just hype, it had teeth. The ceiling was insane, and if the devs kept working on the app, the narrative had legs for weeks. And despite that, I saw the coin at only 30k market cap. And the comparison was weaker tech coins with zero backing were running to millions. And after a few days of holding with conviction, the team paid for the deck screener update, and the team fully endorsed the coin. And when that happened, we were up hundreds of thousands of dollars. You can even see here, right here, I was up like 60k on one wallet. And you can even see right here, 60k profit here. Another one. This is like another 16 ETH. And then right here, I was up over $400,000. But I want you guys to firmly grasp the concept of risk management, and that's how you actually survive the game. It doesn't really matter how good your entries are. If you don't master your risk management, you're going to blow up and not be able to trade meme coins anymore. And I learned this the hard way. This was last cycle back in 2022 with NFTs, and I made $11 million that cycle. The mistake was I was overexposed to a singular asset, and the consequence was I lost 90% of it. It was pure euphoria. I got too lost in the sauce, and the realization was I didn't lose to the market, I lost to myself. That was an emotional rug, and I was just left bag holding on that coin. It's not the dev pulling liquidity from the coin or the dev rugging. It's just you pulling liquidity from your future through bad decisions. You're just getting married to whatever asset you're holding. Number 1, don't over leverage and bet too big on one thing. Sometimes it's not always good to average down if you are afraid of losing that type of money that you have in already. And don't FOMO and go all in. I don't want you guys to have any attachment to any of your coins, and don't marry your bags. Look guys, there's wins and losses in the game, and sometimes it's okay to rip off the band-aid and accept the loss. So you can pause and copy this wallet structure that I really recommend you doing. I did briefly go over this earlier in the video. And the rule is capital preservation precedes capital multiplication. These are the rules that keep you printing. Only risk what you can afford to lose, never go all in, take profits, and always rotate profits into your wallet. I really preach this. Guys, profit made in crypto is not profit until it is stabilized into actual dollars. My mom always used to say that crypto money was fake money, and honestly, it's true if you're not cashing it out into your bank account or keeping it in USDC. The core insight is the market doesn't take your money, your behavior gives it away. And the real alpha is it's not a flashy dump that makes you rich, it's the discipline to survive the downturns so you're alive when the pump actually arrives. So the winning formula that I recommend is discipline plus psychology equals luck turned into repeatable income. Commandments of a profitable mindset. Detach from dollar signs. Think in risk units. Miss the play? Who cares? There are so many plays happening. Don't overtrade and plan every single trade before you enter. And always have these mental targets in your mind. And that comes with experience sometimes. Cut losers without hesitation. Always follow your principles. Trade with confidence from your system, not ego from your emotion. And the biggest rugs aren't smart contracts, they're usually just your own brain. And really the biggest fix for this is to just journal every session. 5 minutes of writing saves me months of repeating mistakes. The 4 questions that you should ask is, what was the narrative? Why did I buy? Why did I sell? And what would I do differently next time? You don't need to be a genius, you just need to be consistent. And that's the boring part that made me $1.3 million last month. And I know journaling sounds so boring and I really hated it at first, but this one habit changed everything. When you don't journal, you forget what narratives actually worked. You repeat the same mistakes over and over again and you convince that you're a genius until you're not and you just lose everything. When you do journal, profitable patterns start appearing and you realize what actually prints money for you. You refine and sharpen your edge week after week. Always ask yourself these 4 questions after every single trading session. What was the narrative? Why did I buy? Why did I sell or hold? And what would I do differently? The payoff is it takes 5 minutes, but over time, the compound effect is priceless and it'll shape you into the best trader you can be. For example, when I started, this is the pattern I discovered in my journal. I realized I was buying a coin that was trending on Twitter and I lost because I was just being exit liquidity. And the winning pattern was every single time I bought when I spotted on-chain wallet flows before Twitter caught on, I printed. So always apply the alpha filter to the strategy as well. Without that journal, I would have never seen that pattern. I would have kept chasing, kept bleeding, and never really found my edge in trading. I mean, even in my inner circle, I recommend literally every single person to journal, and we give feedback, and this is how every single person improves as a trader. Waffle started journaling after joining Fortune, and within weeks, he stopped bleeding on random plays, and he actually started stacking multiple 5-figure wins. I mean, the list goes on, but even Ko, who I mentioned that made millions of dollars, still journals religiously, and that's why he's so consistent. This is the final kicker of the video, and I just want to explain. Most people chase excitement, but the winners choose boring by practicing their principles and actually following along with every single strategy I am telling you. Boring work is what prints. That Yeezy play that made me $1.1 million in profit resulted from weeks of boring wallet scans practicing before anyone else cared. That video trade resulted from the boring process of filtering the narrative inefficiencies that others missed.
Anyways, guys, if you're serious about taking trading to the next level beyond gambling and hitting plays like Bowen, Bayside, Jackson, and more, click the link in the description to apply to join Fortune. Spots are limited, so if it's still there, please don't take it for granted and apply. But if it's not, subscribe, and I'm going to be dropping a lot of sauce on this channel, so stay tuned. Peace.